Now, there used to be a rule, Warren Ingram, that if you wanted to have a peaceful dinner party, you banned topics. You said no religion, no sport, no politics, no talking about sex.
CrossFit.
Nowadays, don't talk about CrossFit.
Vegan.
Being a vegan, having your MBA, and Bitcoin. Jeepers, there's nothing left to talk about.
I don't know why you put sport in there. Sport doesn't fit in there. Sport is, you can
Sport
always
makes
talk
people
about.
fight.
Yeah, but at least it's a friendly debate.
Okay, so we'll take sport out.
Otherwise you've killed all dinner parties ever.
But we'll leave in veganism, Bitcoin, and all the rest. Yes,
And especially people who are vegan that do CrossFit and invest in Bitcoin. You shouldn't invite those people to your dinner parties.
They're too busy anyway. So here's Muriel Rubini. Crypto zealots know nothing about economics, money, central banks, finance, economic history, financial crises, asset bubbles. But like all religious fanatics, they claim to know it all better than scholars who studied the stuff for decades. Crypto voodoo trumps science. That's Muriel Rubini, telling it the way he sees it.
Not shy of an opinion.
No. And the crypto voodooists will say, well, that's precisely the point, because your old world order is over. This is the new world order, and things are changing and changing fundamentally forever.
Yeah, and I think it feels to me a little bit like, when we moved from trading with gold coins and silver coins, and suddenly, you replaced your gold coin, which literally had weight, and you could measure it and bite it and store your wealth. And all of a sudden you exchange it for a piece of paper, that was absolutely worthless. I mean, that piece of paper on its own, was nothing, and it had no weight, etc.
That was a banknote.
That was a banknote
with a number on it that said you can swap this for this value of goods.
Yeah, and then fast forward to suddenly you have cash, and then people saying, well, hang on, we can't have cash because if you want to go and pay for a house, that's a heck of a lot of cash. So I'm going to create a check, and so on and so on and so on. So I think money definitely has evolved very significantly over now centuries, and so this might be. Eventually, this whole cryptocurrency, which some would say is a fad now, eventually it might change the way that money works, and there are a lot of inefficiencies which need to be rectified. That's great. I'm all in favor, and I'm certainly not one of the converts, that believe that this is the new investment class. I think that's a distinction here. So
let's not be rude about cryptocurrency. People who like cryptocurrencies, people who are excited by the blockchain technology. But let's then be perfectly blunt about the investment case.
There isn't an investment case. There just frankly isn't. But before I shouldn't have started with a conclusion. I should have teased us into it.
That's fine.
So
we knew where you were going.
One of my very favorite American websites is one called Motley Fool.
MotleyFool.com, brilliant.
And they recently published something saying, if you bought the very initial batch of bitcoins, you would have paid 0.003 US cents in not that long ago, 17th of March 2010. And if you'd put $1,000 into that batch of bitcoins, you would have received 333,333 coins. Great. Today, you multiply that by the price, and I must say I did the price yesterday because it moves so fast. I have to quantify that you're suddenly sitting on $2.7 billion US dollars. Just for a second, think about that. So your $1,000 in less than 10 years makes you $2.7 billion. Now, I can tell you that conversation's been had multiple times in the last eight or so years by people looking at this and developing enormous regret. I mean, FOMO like you cannot believe, because if only I had done this. Can you imagine what I would be doing with my life today?
I was just chatting to Simon Dingle, who's written a book in Math We Trust, and he's a big crypto head, and has been very involved since the early days of crypto. He told me about cryptocurrency. He told me about Bitcoin when it was at $1, and he put it on the cover of FinWeek magazine. I can't say I wasn't told, and I don't quite know how many he has, but he's looking very relaxed. And again, he's not a proponent of particular cryptos, but is a big proponent of the tech and the marvels of what is going to change the way in which money moves around the world.
So let's talk about the people that are trying to use this as an investment basis, because I think the clever people like Sir Simon and Michael Jordan, you can see it. They are committed to this. There's no back, in their minds, you don't go back from here. There are only ways forward. The problem is, none of us, I think, you, me, and everyone else out there, we're not clever enough to figure out which is going to be the one that's going to change the world. We know that technology is going to change the world, and it feels to me a heck of a lot like the days of the very late 1990s when we knew the internet was going to change things. And there we have this, this new thing called a web browser, and the web browser of the day is Netscape, and it's brilliant. And Google didn't even exist at the start of that. Google was the 21st web browser. How would we have been clever enough if someone had said to us, the internet's going to change the world, and one of the things you should do is invest in a web browser?
You've got to go to Yahoo.
Yeah.
Or ask.com.
Yeah. Or ask Jeeves or whatever.
Yeah. Jeeves. Yes.
Jeeves. And we would have sat there and we would have most likely spread our bets, because that would have been the sensible thing to do, or we would have taken a big call on the big one, the first mover, and that would have been a terrible move. So to me, I'm not questioning the application of the tech, but I am questioning the people that have this FOMO and are climbing in still.
And that was the trouble. That was I was really frightened of in November, December, when the hype cycle was just at its most frenzied. It really was the most insane thing I've witnessed in terms of bubbles developing. And it was patently clear at 5,000, 6,000, 7,000 within a day or two, 8,000 the next day, 9,000, 10. And then before it, I don't want to say it popped, but before it deflated, it hit 20, and then came back to levels and fairly stable around $6,000 or $7,000 a Bitcoin now. But I mean, just the madness and the hype and the craziness of the crowd in this frenzied activity pushed that price up. And I'm almost willing to bet that 90% of people who bought at 10,000 didn't get out on time.
No, and especially those that were then going in on credit cards at $17,000, $18,000, dollars, and today it's sitting at, let's say, 8,000, whatever. They're looking at that and saying to themselves, "Where do I go?" And so I quoted that $2.7 billion as the value it'd have today. What's interesting is I then just went back to December, to your point, and you would have had $5.7 billion. At close to the peak, not quite the peak, but close to the peak, and you would have lost nearly $3 billion in value in that time. The point is, you wouldn't have done it, and that's really the argument here. Is we're getting caught in, and a lot of people did get caught in December in this hype and this bubble, and saying I need to get in now because if only. The truth is, when your $1,000 suddenly got to $600,000 or $700,000 in value, the likelihood is most rational, sensible people would have said, I'm going to take a big chunk of this money and convert it to cash and move it into other investments because I've had an incredible return.
But it's already in cash, Warren. You don't understand. Motley Fool have also launched a whole new service based on cryptos. There's somebody on the SMS line. The industry, the pick and shovel industry around it, ignored at your own peril. Speculative, yes, but well worth learning about. That's our point. We're saying, yes, it is speculative. Don't invest in it, but certainly learn about it. We agree. We are in agreement on that.
And I think if you're going to try and adopt investment principles to something like this, you need to look at this and say, number one, never make an investment decision with the starting point of, I've missed out on X, whatever it is, that growth in Bitcoin or Amazon share price, because that's also a nice one to look at, and I need to get in now so that I can catch up, because now you're starting with an investment from regret. And that's really a terrible place to start an investment basis. Most likely, nearly a guarantee, you are just going to go backwards, because the likelihood is that you've bought it at the peak of a particular bubble. I'm not saying that it's an all-time crash go to zero, but you've bought it at a point in time when the hype is at its peak. And so if I was looking at this, I wouldn't be buying Bitcoin anyway. But if Bitcoin were a company, if it was an Amazon, and it had gone from $20,000 down to $8,000, and I could look at that and I could say to myself, this business sells a heck of a lot of goods. However it sells the goods, doesn't matter. I can see the revenues growing, even if it's not making profit. If I can see the revenues going in a good direction, the revenues growing faster than the costs, it's going to get to the point where it makes something. That would make sense to me. I could understand what drives the business, and I could apply a good deal of common sense to it, and I could make an investment decision.
Like Steinhoff.
Where's the common sense?
No. I'm just saying the billions of rand were poured into Steinhoff. Christo Wiese took 59 billion rand of his own money and put it into Steinhoff on that basis. He could see all of that stuff.
What common sense?
In retrospect, Warren, yes. But here's the trouble. If you listen to Magda Wierzicka, we spoke to her at 1:45. She went to the AGM of the JSE today and ripped into them all about the fact that shareholders have just got no protection at all. The JSE will list anything that complies with its rules and regulations. So Sagamata came within a whisker's breadth of listing on the JSE and was massively overvalued. We've seen the collapse of Oak Bay. We've seen the collapse of Steinhoff. And there's just no comeback for investors. And that hurts investors and then says, well, if I don't have any protection via the JSE, I might as well buy Bitcoin. And that's a dangerous place to be, isn't it?
It is, because, I mean, if you talk about potential for fraud and corruption, you need to look at the now billions and billions of dollars that have been stolen in the crypto world from, not from the actual coin itself that's being issued, but the places where you store your money, and that money is really gone. You cannot find it. So I think that you have a double whammy there. One, you've got an asset. If you call it an asset, it's something that can lose 70% of its value in literally hours, not even weeks or months, literally hours. And secondly, if you're sitting on your hundreds of coins, they could be stolen from you in a heist that you wouldn't even know about until the day you decide to cash them in. So the trick there is converting it from where you store it to actual kind of today's world money. The risk there is enormous. And we're seeing, these frauds don't get, it's amazing. They don't get a lot of airtime, but they're big and they are huge. And so to me, at least, about a bank robbery, you can see it, right? It'll be somewhere, someone will be talking about it and you'll see something moving and it's not happening there. So I think exercise caution there.
Other topics that you're not supposed to bring up at dinner parties. We started off this conversation talking about topics at dinner parties, and we talked about religion, and we talked about sex, and we talked about veganism and MBAs and CrossFit. And somebody else on the SMS line says, okay, you also can't talk about whether you went to Bishop's or St. John's. Yes, good one. We'll add that to the list.